What is going on, everyone? It is Pedro De Leon.
And I'm Chihiro Kurokawa, and we are Beyond Stocks.
Yeah. So today we're going to be talking about what is alternative investing. Now, here's the reason why I want to take it back to the basics. There's been a lot of questions. People asking me, like, we still don't know what you do. Or I don't know what's alternative investments, and that's fine, right? That's what we're going to be talking about today. And so we're going to break it down. I'm going to have Chihiro kind of start it out. And then if you guys are watching this right now, and if you have any questions, go ahead and comment on the comment section, and we'll definitely answer those questions.
Yeah, both of us have been getting DMs, emails, text messages. So we appreciate that because that helps us drive the direction of our episodes and our content.
Yeah, absolutely. Yeah, definitely. So thank you.
All right, so let's get started. What the heck is alternative investing? Very simply put, it's anything that goes beyond stocks and other traditional investments like bonds, mutual funds, ETFs, and the like. So that leaves a huge universe of investments like commercial real estate, venture capital, which is investing in typically technology startups. And then you got private equity, which is in itself an extremely broad range that encompasses any and all types of business investing. And private equity, again, has a very broad range of different types of investments into businesses. And then you got crypto, which could be owning crypto itself or might be crypto mining. And then the private credit, that is that's lending outside of the banking system. So these are just some examples. There's plenty of others, right, Pedro?
Oh yeah, there is a lot, man, and we're still learning more about what's out there that people are not aware of. We're not aware of either. So yeah, absolutely,
definitely.
Yeah. So that kind of takes us to the second thing, which is what is an LP? Now, this is something that I've been asked several times, and which is okay. I didn't know either, right? But being in the same rooms and hanging out with the right people, this is all the people that understand investing. This is what I've learned, right? So an LP is a limited partner. Now, essentially, you are a passive investor that absolutely, have no responsibility in the project, right? And I want to add this. There's people that saying there's no such thing as passive income or passive investing. There is, right? This is what it's about. And so that's why, hence, you become the LP. Now, again, there's no responsibilities. The other thing, too, is that the liability is limited, right? So your liability with the company is limited. So if there's an issue, lawsuit, whatever, the general partner is the one who needs to handle all that, right? So keep that in mind.
So what's the worst thing that could happen to you as a limited partner then in a deal?
Oh yeah, absolutely. I'm going to lose my money.
But that's the absolute worst thing, right?
Yeah, the absolute
worst.
You
lose your house or your business or get your income garnished if your deal as an LP goes bad?
No. That falls on the general partner, right? So, and making sure that they have their ducks covered, right? If not, then that's some issues for them. And then the other thing is, as a limited partner, you receive prorated profits. And so depending on the conversation and what was the contract set up for, what's the percentage you're going to be receiving, that's your prorated profits, right? So, yeah, and every deal is different. So sometimes you may have, let's say 10%, right? As an example would be private lending. You get 10%, 12%. Or you can get more if you're doing a joint venture with someone, just yourself and the person as, starting another project. So as an example, right? So, but those profits, right? Those interest rates are different. So that's limited partner. So if you hear people say, and there's one thing I want to add is, oh, I just partner up with someone, whiskey distillery as an example, right? People were like, hey, how much?
I know somebody who did that.
Yeah.
Pedro.
Yes, sir. But it doesn't mean that you're going to be working in the business, right? It just means you're just a passive investor, in the deal. So, yeah.
Thank you, Pedro. Yeah, very good explanation. So then Pedro mentioned GP, which stands for general partner. So what's what or who is the GP? Now, the GP can be one person, or it might be a group of people, or a company might be considered the GP on a deal. But that's
Mhm.
the lead investor. So that's going to be the person or persons or company that put the deal together. So they had to find it. They had to get that deal under contract, so that then they can determine, all right, we need to raise $5 million in equity to take down this project, to buy this multifamily property, or buy this company, or what have you, right? Afford to invest into the project. Now we're going to raise that capital through our prospective LPs, who are going to invest into the deal as silent partners who do not have managerial responsibility. So then all the managerial responsibility, all the liability if things go wrong, all the upfront investment into finding the deal, putting down an earnest money deposit, which might be at risk, meaning
Mhm.
you put a significant deposit down towards the purchase of a company. And if it falls out of contract, then you might lose that deposit. And that deposit might be a significant amount of capital, might be tens of thousands, might be millions of dollars. That's a risk that the general partner takes on. And then the general partner has the responsibility and the risk of closing the purchase of that asset, and then operating it, and operating it such that they can generate those profits, which then on a prorated basis will flow through to you as an LP. So these
Mhm.
are the types of deals that Pedro and I are focused on here at Beyond Stocks, where we think there's just a tremendous opportunity for high income earners to invest in these types of properties, to go beyond just traditional investments and build wealth through having a piece of a business, or having a investment in crypto mining, or whatever it might be. But it's just a tremendous vehicle to build wealth through private offerings, right, Pedro?
Right, absolutely. I do want to touch something about the GPs, right? So most of us, and I'm actually talking more about myself, is that it's a little difficult. It can get a little difficult investing in someone versus, I actually want to operate everything, right? So it's good to be the GP too, but know that there's a lot of responsibilities. Just like Shihiro said, there's a lot of things that you have to keep in mind. And we actually had a conversation with a developer last week about, being all the things that you need to worry about as a GP, right? So do you want the headache if you are W-2 or you already have a business? Do you want the extra headache for that, or let someone else handle it? But of course, doing the due diligence, right? And how to know who you're going to invest with. So,
You brought up some really good points, Pedro,
yeah.
which is, it's hard to even verbalize all the risk and work and sweat that goes into being a GP in a deal, unless you've actually been one yourself. And so I might be getting a little ahead of myself here, Pedro, but what I
Go
want to
for it.
talk about is, I have very successful business owners and operators who are investors of mine, right?
Mhm.
And I have a lot of successful business owners who aren't investors of mine, and they've turned me down because they say, "Hey, that's great that I can earn 12%, 15%, whatever the case might be, through your deal, Chihiro. However, if I invest that 250K in my business by, let's say, putting an additional expansion in my current factory, then I can earn more than that,
Mhm.
which is great." And you're right about that. However, what's the risk, the time investment involved in doing that? And most importantly, you're not diversified at all, right? And so when we look at some of the most successful business owners, I don't know, let's take Jeff Bezos, right? Do you think he puts all his money into Amazon, even though Amazon is an incredible business? Of course he doesn't, right?
Mhm.
You bet, you bet your butt, like he's investing as an LP in all sorts of things, right? Because
Right.
he sees the value in his money working for itself, his money making babies. And so, yes, he wants active income, and he wants to grow equity and wealth through actively being involved in his businesses, but he also is going to be passively invested.
Right. It's something that it comes into mind about what you said about Jeff Bezos, right? It's about delegating. So just how you're delegating your own business, I mean, in order to scale, you have to delegate. If you don't delegate, you're not going to scale. It's the same process as far as like delegating where your money is going to go and who do you going to, who you going to hire to make your money grow, right? So keep that in mind, because I know it can be scary, and it can be a little bit, like, I don't know what to do. Should I invest or not? And this is why the podcast exists, and this is why our community that we're going to be starting pretty soon, it exists, right? Because of how to, work with someone who is a GP. So yeah.
Yeah. So Pedro, can you tell our listeners a little bit about, like, we've been talking about passive income, but then there's also active income. Can you explain that to us?
Yeah, definitely. So active income, as you might know, it can be working at a job or career, right? W-2, or you have your own business, right? You're working in your business, and it's producing this revenue. And so that's active income. And versus passive income, just like we mentioned, right? You have no what's it called? Any oh my God,
Managerial responsibility.
Exactly. Yeah, thank you. And so that's that's the active versus passive income. Now, here's the thing that I want to kind of touch bases on. Sometimes it's a hybrid. And so let's say if you're an investor, you want to invest in a deal. Let's say it's a friend, or like Shihiro, hey, you asked me, like, want to invest in your deal, but I can come in as an investor and actively help you grow the company to a certain point where I can now step away from it. So that, by what I mean by that is, maybe my experience can help you as a guidance, as an advisor or board of advisor, that can help you grow your company because I have this niche experience, right? But then after that, I can step away. But I still, so for me, from my understanding, what I understand this is, it's more of a hybrid model, or active and passive investor, right? And that works too as well. If you have an experience and then you say, hey, these guys are looking to hire me, you can do both, right? And you can set up your hours and however you see fit as far as structuring it. And I've seen this a lot with tech companies, right? When they need to hire an advisor, and that's kind of how it works, right? So the advisor comes in, or a board of advisor comes in and have meetings like maybe once a quarter or something like that, and that's all they come in, just to make sure that the founder knows what they're doing, or any challenges they have, they can come in and help them kind of clear a path for them, and then they step back, right?
Yeah.
So yeah.
I have primarily seen those types of advisory relationships in the startup and technology ecosystem, which I know you have a history in. But yeah, thanks for bringing that up, because that's yet another example where you can trade your expertise and time for getting some equity in, say, a startup.
Right. Exactly. So let's talk about private offering. This is a question that's been asked as well. And so kind of break us down for us, man.
Okay. So there are many ways to invest in alternative assets. Like, there's literally ETFs out there that are focused on real estate or any number of different alternative assets.
Mm-hmm.
But we're not generally talking about that, right? We're talking here at Beyond Stocks, we're primarily focused on private offerings. So that's a deal that's not going to be traded on a on any sort of exchange. It's not an ETF. It's not like a public REIT, for example, but it's rather something that you're going to get a deal sent to you typically from the operator of a project. So, for example, I met a very fascinating, very charismatic founder of a beverage a couple weeks ago, and I said, "Hey, this is really interesting." And I knew he was raising capital, so I had him send the deal to me. And actually, shout out to Dan Olson with CFO Now, or is it Now CFO? He took a look at that for me. But anyway, point is, that's a deal that came directly to me from the founder of a company, and he's looking to raise equity. That is the very definition of a private offering, right? I didn't get that through a financial advisor or it certainly wasn't listed on an exchange, right? So private offering is going to come directly or indirectly from the operator of that company or of that project. And so the pros of that are going to be there's fewer, or in many cases, no middlemen involved between you and that operator, which then means you're not paying fees, right? So you're more directly invested into that project. Number two is you're going to have a direct connection to that operator. So, I own some Coca-Cola stock, but I've never written an email to the board of directors or the COO of Coca-Cola, and I'm never going to be able to. Whereas in the various private deals that I have, if and when I have a question, I call, text, or email those people. And then the third point that is a pro of investing in private offerings is you can find really unique deals that you can't find on stock exchanges or in the stock markets. So the example I just gave, that this is a beverage that is privately held, and there was going to be no way I would ever have found out about this if I hadn't run into that gentleman at an event.
Yeah.
But there's probably cons here too, right? So Pedro, any thoughts on that?
Oh, it's definitely cons. It's like with anything, right? So like you're gonna find always cons to this. So one of the cons, right, is due diligence. Now, there's so much checkpoints that you got to go through as far as due diligence. And that is because you're not just looking at the business, but you're looking at the team. You're looking at the history. You're looking at the background. I mean, there's so much, right? I mean, a while back, I remember you and I had a conversation with Main Shares, one of the members there, and they go through like a robust process of actually doing a due diligence on the person, not the business, on the person itself, right? And of course, right, the business, there's a process to that as well, a due diligence process. So if you're not familiar with a certain industry, this is where it becomes a hurdle for both the founder that's raising the money and also for the LP. And so due diligence is a big thing. I'm going to give an example as, if you're going to raise money, if you're going to invest into a founder that is raising money for, like you said, the beverage, right? What is the distribution channels, who they're using, or, you want to go through in depth. What is their plan of action? Who do they have, right? Because if they're lacking on somewhere, then you want to make sure that they don't have to have all the ducks in a row, but what are their plan of action? Who are they going to reach out to once they raise the money? Instead of just kind of throwing spaghetti in the wall and see which one sticks, right?
So I'd like to give everybody an example of poor due diligence on my part on a deal, right? So a friend of mine who we were running in the same circles as multifamily investors. So he was and is a multifamily general partner in multifamily deals, and that was my history as well. He sends me an oil and gas deal, and he says, "Hey, take a look at this." He's got no financial interest or anything. He's just sharing a deal with me because we're deal guys. And so I'm like, all right, cool. What do the distributions look like? He tells me, have you been reliably getting those distributions? Yeah. Okay, sounds good. And then I forget about it, right? Few or several months later, there's a very well-known economist whose newsletter that I follow. And this guy started pushing that same deal that my friend had sent to me months earlier. And I'm like, I've been reading this newsletter for literally almost a decade. So it instantly really elevated the profile of the operator on my part, right? I check in with my friend. Hey, you still getting those distributions? Yeah, they still good. Yeah. So dude, I did that. That was essentially the extent of my due diligence. I was sold, Yeah. And I invested in it. Guess what? The deal sucks, man.
Jesus.
The thing about horizontal drilling in oil and gas is the production curve has a really steep drop off. So in the first month is going to gush a lot more than the second month, and then it just drops off, right? So after the first 12 or 18 or 24 months, the production out of that well generally on a horizontal well just drops off dramatically. So if you're not getting really strong cash flows up front in that type of a deal, there's a good chance the deal itself is just not good. Your return
Wow.
prospects are pretty weak. If you're only getting like anemic 6, 7, 8% cash on cash, like right out of the gate, which is exactly what I've been getting. Now, as
Jesus.
luck would have
Yeah.
it, right, I've met multiple oil and gas operators since I invested into that deal,
Mhm.
and they've all told me the same thing, like, oh, that operator is like kryptonite, like nobody touches them. Bro, you got sold, you're effed, like whatever, right? Like, and it's just a true this is just an honest story about,
Yeah.
like, you got to do your due diligence, right? I should have found other people that invested with them. I should have
Mhm.
tried to find an oil and gas operator to say, hey, what are the kind of dynamics that I should expect from a deal like this? Have you heard of this guy? Right.
Mm.
And I didn't do any of that.
Yeah. That's tough. That comes down to as well the not getting the information because since it's a private company, right? There's it's not public, so where are you going to get the information? So kind of takes a little bit of investigation on your part to figure it out. Hey, so and I want to add that because that has happened to me before in the past. You just kind of trust someone says, hey, and they're doing well and everything is fine, and you just like, what, just what the heck, just go for it, right? And it happens. So there's a saying, right? Trust but verify. Um, and it goes with everything. So yeah,
Yep.
absolutely. So these are some of the things as far as we want you guys to know more about alternative investing because this is just at the tip of the iceberg. There's so much into it. There is, if you want to learn more about commercial real estate or you want to learn more about like oil and gas, what are some of the things that you should know? Now, this is what we're going to be doing in the future as far as when we're building our community so you can understand and kind of go to school again to learn a little bit more. But this will be more like hands-on and kind of knowing what questions to ask based on the asset class, right? So that's coming soon. So if you guys are looking to be part of a community, let us know. We'll definitely keep you on the wait list.
Yeah. Basically, my kind of conclusion here is alternative assets through private offerings is like a tremendously powerful way to invest. You
Yeah.
can get some crazy returns, but I will say, because these are private offerings, the information isn't readily available. Like, you can't just look up SEC filings. You can't look. There's no quarterly statements, right? And so the onus is on us as potential LPs to do our due diligence to make sure a deal is going to be right
Yeah.
for us. And that is exactly what we want to help people achieve through the Beyond Stocks community.
Right. I do want to add something, and Shahira and I are kind of like iffy about this, and everybody, but I just want to make everyone aware that there are platforms coming out or broker dealers that are actually allowing people to invest through them that invest in a private offering, but there's a lot of fees involved in that. So um, it's on a case by case basis. It's something that you guys want to do, look into it. That's fine. You can go to Charles Schwab or LPL or somebody that works with LPL. But I just want to put it out there. But again, right, with that, that's the con, which is a lot of fees. So I
Yeah.
don't know if you want to add some more to that, but yeah.
Yeah. So the way that you can determine whether something is a direct investment into a deal or not is pretty simple, right? Like, if the person that's offering you the deal is a financial advisor, then they don't offer deals to their investors for free, to their
Mhm.
clients for free, right? They have expenses, like they're gonna be collecting fees or a percentage, or in some way they are taking compensation, as
Right.
opposed to when you're talking directly to somebody at the company uh, that is going to be doing this real estate project, or
Mhm.
that is going to be acquiring that business and running the show. That
Right.
that means you're talking directly to the operator or an employee at the company that's going to be doing the operation. So that's
Yeah.
the simplest way to find out, right? Am
Yeah.
I directly going through the operator or not?
Right. Exactly. So it's a case by case basis. It's up to you as what is your risk tolerance. And so, right. So definitely. So yeah. So essentially this is alternative investing 101. If you have any more questions, you want to go more in depth about certain asset class, you can definitely let us know, send us an email. We can, maybe put like a case study together. I don't know what you think, Chihiro.
Yeah, maybe we can do that.
Yeah, definitely. So again, thank you so much for you guys for, supporting us. One thing that I want to say, next Thursday, we are having our monthly event in McKinney. And I want to say thank you so much to RTB Advisors for sponsoring us. Tickets are sold. So we are maxed out, but keep tuned and also ours, subscribe to our newsletter so you can keep tabs on what's coming up for us as far as events and anything else. Right. So yeah. Other than
Shout
that,
out Adam at RTB Advisors. Thank you.
yeah, thank you so much. All right, guys, stay tuned for the next one. Take care.